by a stronger dollar and intensified recession concerns. Later today, the release of the Fed's December meeting minutes is expected to capture the market's attention, and Friday's employment data is considered as a key defining factor for the future outlook of the US equities sector. In this report, we aim to present the recent fundamental and economic news releases that impacted the US stock markets, look ahead at the upcoming events that could affect their performance, and conclude with a technical analysis. Tesla, the electric car manufacturer, plummeted in the first trading day of 2023, leading the S&P 500 as the biggest loser. Tesla's shares price was down by more than -15%, but it managed to pay off some losses and close the day -12% down. The automaker, according to reports, missed expectation of its fourth-quarter delivery targets, citing ongoing issues in logistics. Despite the miss, however, the automaker's deliveries throughout 2022 rose by a staggering 40%. Furthermore, the company continues to struggle with weaker demand for its electric vehicles in both China and the US. More recently, the company offered discounts and other incentives in order to boost car sales to counter diminishing interest. However, the demand outlook remains uncertain. The lack of sales, particularly in China, stems not only from a slack in demand due to deteriorating economic conditions, but also due to fierce competition from other rival electric vehicle makers, such as Toyota. Adding more salt to injury, analysts from top brokerage downgraded their price targets to reflect the ongoing problems, placing more pressure on its share price. Despite the grim outlook and the disappointing news, some players see beyond the temporary shortfalls and indulged in a shopping spree, adding more Tesla stock to their position and dragging the average position costs down. Such players include ARK Investments CEO and founder Cathie Wood, who bought the dip and picked up 25K Tesla shares. According to Bloomberg data, the CEO loaded up on cheap Tesla shares once again back in December, betting that US sales could cover the slowdown in demand from Chinese consumers. Alibaba Group, the e-commerce giant, jumped by more than 7% in today's early Asian session as Chinese regulators have approved a financial plan of A&T Group CO, a close finance affiliate of Alibaba. The move sparked optimism across the Chinese online and internet-based sector and is considered as a positive step towards relieving some of the excess pressure Chinese authorities have been placing upon the internet sector for the past few years. According to reports, the China Banking and Insurance Regulatory Commission division gave the green light to Alibaba's plans, which aim at raising capital equal to 10.5 billion yuan, 1.5 billion in dollar terms, for the expansion its consumer unit. Overall, the easing stance from the Chinese regulators, alongside the gradual reopening of the Chinese economy as whole, adds strong foundations for a serious upside potential for Alibaba's share price for 2023. Nevertheless, traders should apprehend the positive news with a grain of salt, as in a recent interview, the head of IMF, Kristalina Georgieva, stated her concerns in regards to growth projections for the Chinese economy for 2023. She noted that for the first time in 40 years, China's growth in 2022 is likely to be at or below global growth, and she foresees that for the next couple of months it will be tough for China, and the impact on Chinese growth will be negative. The impact on the region will be negative. The impact on global growth will be negative, pointing out that there are significant risks lying ahead. Thank you for watching.